Thank you again for joining us. This is amazing to have such a great turnout. And we're just so pleased to see how many people are here thinking about tax credits, tax refunds, and fighting poverty. So to start, before we start, get into it, I wanted all of us to have a moment to think about some of the clients that we're serving, some of the, and everyone here has a different community or maybe there's some overlap, but what would $2,500 more dollars mean for them? Some extra cash in their pocket today. If you work with young adults, if you work with folks who are unhoused, maybe immigrants, you can go ahead and put your answers in the chat. We just wanted to hear from you and get everyone thinking about their clients before we start sharing some of the tax tips and tax benefits for the year. So if you could use the chat or you can use the Q&A. What would an additional $2,500 mean for you and your clients? All right, so many great answers. I'm looking at rent payments, covering utilities, getting their apartment, some really great feedback, right? So that's what today is all about. How can we get more money in the hands of our clients and back to our communities who, again, at this time, really, really need the money. And why did we share $2,500? This is actually the average federal refund for a low-income taxpayer. Now, some individuals with, depending on earnings and maybe their family size, they get well over $2,500. But to know that the average is $2,500, it's an incredible amount, and you can really make a change for your year, make ends meet, plan family activities like somebody mentioned. And even in California, there's even more benefits for low-wage workers. So beyond the $2,500, we're going to cover all of this. We're going to show you all the credits from the federal and the state. So I want to thank all of you for being here. It's incredible to see this turnout and so much energy in the chat. And I guarantee you will learn a lot today, and hopefully we can give you some information that you can pass on to your community and even information for yourself. So you're here today to learn about, how can you claim money for your clients, the money that they deserve. And again, this is going to be tax focused, but we will cover a lot of topics, and even within this presentation, we can carve out some specific credits and programs and have entire presentations. So it's going to be a high level look at how tax credits can help combat poverty. We are going to cover tax tips for this year, promoting tax credits with your clients, and then getting them a free tax preparation service. Now, we can't talk about money without connecting that to free and low-cost bank accounts. We want our families to keep all of their refund and keep it, have it safe, receive it quickly. So we'll have a guest speaker from the FDIC to talk about free and low-cost bank accounts, and then we'll wrap it up with some questions. So if you have questions, you could actually put them in the chat or the Q&A. We are going to get through all of them. We have a pretty good tax team handling that. But to start, we want to introduce the host for today, which is Danesha Smith. She is from the LA County Center for Financial Empowerment. So Danesha, if you'd like to share a little bit about your department and all of the great work that you're doing.
Thank you, Audrey, and thank you everyone for joining us this afternoon. Again, my name is Danesha Smith, and I oversee the Center for Financial Empowerment, which is a unit within the county's Department of Consumer and Business Affairs. The CFE works to improve the financial health of county residents with an emphasis on Black, Indigenous, and people of color. And we do this by developing cross-sector partnerships like this one, working to build capacity amongst service providers, and advocating for issues and policies that advance wealth equity for BIPOC communities. As some of you may know, the county's Board of Supervisors received an allocation of federal American Rescue Plan Act funds to address the various needs of county residents most impacted by the pandemic. And this funding is a wonderful opportunity to make significant investments in communities across the county. The CFE received some ARP funding. We are leading several ARP-funded projects, and we're really excited for the opportunity to carve out new initiatives that address a wide range of financial health challenges facing county residents. And one of those issues is this initiative, expanding VITA services. For many of the people and the families that we all serve, a tax refund is the largest lump sum of money they will likely receive all year long. And so tax time is really a critical opportunity to infuse much needed cash into households that are struggling to stay afloat. And as Audrey alluded to, this money goes really a long ways at helping families pay off debt, increase their savings, and decrease their reliance on high-cost lending products like payday loans. And during the pandemic, we witnessed how the tax system was used as the primary method for delivering relief funds for vulnerable households. And so that increased the demand for trustworthy and reliable income tax preparation services. Just thinking back to when the CFE launched, we were really appalled at the data around the lack of earned income tax credit uptake in the County of Los Angeles. Hundreds of millions of EITC dollars goes unclaimed by LA County taxpayers each year. And so we worked with the City of Los Angeles, KYCC, United Way, and a host of other organizations to establish this Free Tax Prep LA initiative. And it's been going strong since 2016. So through this collaborative, we promote education, outreach, and awareness of the EITC and other refundable tax credits. But we also are working to increase the availability of free income tax prep services. And that's exactly what this initiative is about, is increasing access to VITA services, as we refer to them, tax prep services, and I-10 application assistance for qualifying low to moderate income county residents. And so I'm so pleased to bring this service to county residents. VITA helps taxpayers save millions of dollars in unnecessary tax preparation fees. And VITA providers are critical touch points to connecting county residents to other support services like social services. So again, very pleased to be working with KYCC and their cohort of local CBOs who are implementing this project. And with that, I will now turn it back over to Audrey Casillas, Assistant Director at KYCC, to share tax season highlights with us.
Wonderful. Thank you so much, Danisha, for that introduction. More and more taxes sound more actually interesting, right? So for the earned income tax credit, like Danisha mentioned, it benefits low-wage workers, and I'm going to share a little bit more how to get this money, how much is available, and you know how all of the taxes work together so that you can share this with your families that you're working with day to day. So when we talk about tax credits, what this means is it will pay any taxes that are owed, and then the client can receive anything that is left over. And that's how you see individuals with the large refunds, right? And so we're going to talk a little bit about the federal earned income tax credit and the state earned income tax credit. EITC this year is worth up to $6,935. This is an incredible amount of money. It depends on how many children you have and how much you earn. And then for the state of California, this is a recent development in the last few years. The state has implemented its own EITC because the federal level has been proven to fight poverty, bring more dollars to people who need it. And this year, it is worth over $3,400. So quite a bit of money is available alone in the two earned income tax credits. This is a tremendous amount of money, and the only way you can get it is to file a tax return. So let's talk about EITC. It is a powerful tool to combat poverty. It helps working people thrive. It helps families each year get out of poverty because the amount of money and earnings actually bring their household earnings above poverty level. So we saw in recent years, in 2019 and on, the EITC and child tax credit brought 10 million people out of poverty, including 5 million children. So it's extremely powerful. Kids get a better start in life. So what we're seeing is that mothers who are claiming earned income tax credit have much more financial security, less stress, and this has an impact on how children are raised and the household that they are in, that they are being raised in with a better start in life, and better health outcomes. More so children once they're in school, studies show, and these are studies from the Center for Disease Control, who looks at poverty and health issues and sees EITC as one of the areas that helps alleviate poverty, which in turn alleviates health issues. Young students who receive EITC in their household score better on tests. So you see that they are matriculating in school and actually even doing better in math, which has lifelong implications. Moving on, even when it comes to meeting household basic needs, families have what it takes to pay bills, as many of you mentioned, pay back, pay rent, pay for vacations, pay for enrichment classes. And so with increased sense of economic stability, families and households do much better. And then again, making major purchases and investments in their future. This is where we see a lot of families use their earned income tax credit to get ahead, have stable transportation to maintain work, keeping their phone on, things like paying for extracurricular activities, investing in themselves, perhaps even starting a business with this cash. So again, like Danesha alluded, Los Angeles is notorious for having one of the largest percentages. 20% of individuals who qualify for this money do not even file a return. And that's 20%, one in five. So this results in close to $580 million going unclaimed each year. This is an incredible amount of money. And like we saw in the earlier exercise, $2,500, let's say that's the average refund, right, for an EITC tax return. What that would mean for each individual household. It's an incredible amount of money. And again, many folks qualify, may not even know it, and are missing out on a whole lot of money. So how do you qualify for the earned income tax credit? The EITC is available to taxpayers with earned income. So this includes a job or even self-employment. Self-employment we'll go over in a little bit, but it's a catch-all word for folks in the gig economy, street vendors, making money under the table, cash. Maybe they have their own business or they're an independent contractor, consultant. That's the catch-all for self-employment. So you can see that nearly all of the families that we work with, if they have a job or they are self-employed, they're eligible at some level for EITC, should they meet income guidelines and meet the other qualifications. The taxpayers and any qualifying children need to have a social security number. This is the only credit that we're going to go through where it's required that both taxpayer and the children have social security numbers. We are going to go through other credits where undocumented taxpayers can be eligible for other benefits. If the taxpayer does not have children, they need to be between the age 25 and 65. If the taxpayer cannot be a dependent. So we often see this with, let's say, young adults who are still on their parents' return. They would not be qualified because they are a dependent on someone else's return. But for the majority of the families that we work with, you are going to see that at some level or so, they will qualify for federal EITC and even child tax credit. Child tax credit is also another effective tool in fighting poverty and bringing essential dollars to our low-income working families. This year, the child tax credit has reverted back to the traditional amount, which is $2,000 per child. We did see an expansion last tax season under some pandemic relief programs. And although that program has ended, 2,000 up to 2,000 per child is still a substantial amount of money. We encourage that taxpayers, I think there's kind of like this word on the street that that expanded child tax credit has ended, and they may understand that as child tax credit has ended, but not at all. It's still going strong. It's still up to $2,000 per child. And this is an instance where the taxpayer can be undocumented. They can even file with an individual tax ID number and qualify as long as the children have social security numbers. And this is actually like what we see a lot with our families. If you do have an undocumented adult head of household or a parent, their children most likely would be born here and have a social security number and would qualify. Now, there are other federal credits and deductions that you should be aware of. There are credits for individuals in college, higher education, and that includes community college and career training. There's also credits for childcare. There are deductions for student loan interest paid, credits and deductions for retirement savings, and also credits if you are under the covered California, if you have purchased your healthcare insurance through the marketplace. So still many benefits for a lot of the clients that we serve at many points in their lives. So even young adults, families with children, mixed status families, there's something for everyone. Okay, I'm going to go a little slower and talk a little bit about state of California tax credits. So we've covered federal. There's even more money available to all of us living in California. I mentioned this earlier, the California Earned Income Tax Credit is worth well over $3,400. This credit is available to those making under $30,000, also from a job or self-employed. Now, the California EITC is available to undocumented taxpayers. There is no requirement to have a social security number, and our undocumented neighbors will be using an I-10, individual tax ID number, which the tax site can help them obtain. So this is really great information. You can still file your federal and state and still claim a tremendous amount of money from the state of California. Taxpayers can claim this credit as long as they're 18 and older, and no one will claim them as a dependent. So again, if you're working with some young adults, this is going to be a tremendous resource. Potentially, if they're working part-time or low wage, they're going to qualify for Cal EITC. So you'll see there's a little bit of difference between the state and the federal. The state, a little more flexible. Now we're getting to young child tax credit. So the state of California has recently implemented the YCTC. It's for individuals that qualify for Cal EITC, which we just covered, and they have a child under the age of 6. So that's 5 and younger. They will just get an automatic $1,083. Again, this is coupled with things like the federal EITC, child tax credit, and now with young children in the household and on the tax return, you're seeing an additional $1,083. And again, you can be undocumented and you can still claim this money. So, we're starting to see these dollars add up, right? Now, this is a very exciting news. This is a new credit also from the state of California, and it's an additional $1,083 per eligible taxpayer. And this is called the Foster Youth Tax Credit. We often, read studies and statistics that transitional age youth face multiple barriers. So the state of California has now implemented this tax credit for former foster youth. And it's geared towards young adults who are within the age of 18 to 25. at the end of the year. So if their birthday was, let's say they turned 18 on New Year's Eve, they will qualify for this credit. And if they were in foster care at the age of 13. So the way this credit's going to work, it's super simple for the preparers, or even if a client is doing their own taxes, it's literally a question: was this person in foster care at age of 13? It's a yes or no, and it's added to the return. The client will need to provide one of the codes that's associated to their foster care status to the tax preparer, or enter it on the software. But other than that, there's not a lot of paperwork. There's not a lot of documentation. It would just be providing the code that's been administered by the state of California for that case. And in itself, we're open to presenting directly on any of these topics that we just covered, because there may be many questions and folks wanting to ask about their individual situation. So I went through the federal and state tax credits that are the most popular. There are more, but these are the ones that we see with most of our clients. And I wanted to share a little bit, kind of like a recap of what it looks like at every income level, the maximum income level, and what they could get as the maximum federal earned income tax credit. Now, depending on the number of children, it affects how much you'll get in that credit. This is a screenshot, and you're going to get all of this in an email as a PDF. So you'll be able to look at this, print this, and refer to it after the meeting as well. And also just a recap on the state of California credits. Again, a tremendous amount of money for individuals with children, without children, and available to taxpayers regardless of their immigration status. So very, very excited about that. And I wanted to provide like a simple tax situation. Maybe this could be a situation that you're in, or maybe someone that you know from the clients that you work with. I have a simple example. We have Aurelia. She is a mother of 2 children. She made close to $34,500 last year. And based off of the earned income tax credit, child tax credit, and all of that for this year, she could expect a refund of $7,842. This amount includes, I also want to explain the last line, which is tax withholding. And if you're familiar with your paycheck, you're always paying taxes on every paycheck. Miss Aurelia is qualified to get $456 back from those withholdings. But other than that, her refund is quite substantial, and you'll see that she's qualifying for federal EITC, child tax credit, and the young child tax credit as well. All right, so let's talk about misconceptions about taxes. And often these are kind of like the frequently asked questions. We're talking about clients that may not file, and why. What we often hear is that our clients, tell us, well, I didn't make enough. I'm not even required. I make below that requirement amount. Yeah, there's a mandate for those who make a certain level, but if you're very low income and you don't file, you're probably owed a huge refund. You're probably owed a whole lot from earned income tax credit, from maybe other credits that are available from the state. One of the things we also want to share is that tax refunds are not considered income. And this comes up a lot with individuals who are on CalWorks or different benefits. They worry that this cash injection will mess up their application to continue with these benefits. And not at all. You see these clear deposits. It's clearly from Department of Treasury, clearly from Franchise Tax Board. Benefit workers know that this is not earnings from a job or some other source, and it is not calculated with qualifications. I'd also like to add that the benefits you receive are not even income. So we often get this question with taxpayers who, again, are on different programs like SSI, CalFresh, hey, do I have to report it? Or, you know what, they didn't give me a document. What do I do? How do I file? How do I continue? I say, You don't even need those. That's not even taxable. It's not even income. You do not need to report these type of benefits on your tax. There's just nowhere to put it, in fact. Often we hear too that clients missed a year. This has come up quite a bit because of the pandemic. Many folks didn't know where to turn, maybe where they usually went to have their taxes prepared, it was closed or had limited, they were requesting you to upload documents on the internet and crazy stuff, right? Folks just skipped filing returns. And if we recall, there was a lot of money available. There were stimulus payments, there were advanced and expanded child tax credit. If you missed a year, one, you can file the next year. There's nothing wrong, folks. You skip a year, big whoop. We hear that a lot. Well, I didn't do it last year. Am I going to get in trouble if I do it this year? They're just going to keep it. No, not at all. They treat every year separate. And in fact, you could actually file 3 years after the deadline to claim any refund. So again, we're falling into that zone where right when the pandemic started, in 2020, maybe you had to file that 2019 return and you didn't. You can still do that. You can still file and you can claim that refund. And then again, tax refunds are also not counted as public charge for immigration purposes. We saw a couple of years ago under the last president a huge scare about accepting aid and accepting benefits. And tax credits and tax refunds are not at all included. We're never included in public charge, but I think for a lot of our immigrant community, they were just nervous that accepting any benefit would be detrimental to their immigration status. So it has never been the case that it's for public charge. And now that that has been removed, public charge, I think a lot of our clients still carry that idea that accepting this money just doesn't look right. And in fact, if you talk to immigration attorneys, the first thing immigration wants to see is a tax return. They want to see an established record of earnings. They want to see that you are here in the U.S., you've invested in this, and you have a livelihood. So even when they get consultations from an immigration attorney, it's highly encouraged that they're filing and establishing that they are living here, working here, supporting themselves, and all of that. And again, immigrants can file. We often hear, well, I'm not from here. I don't have status. Should I file? Is it safe? It's completely safe. Immigration and IRS do not share information. They're not allowed to. They never have. And in fact, like I shared before, some of the first steps to starting an immigration process is to submit a tax return with your application for changing your immigration status. And if you have any questions, you can also put a message in the Q&A. Our team will help out with that. So let's talk a little bit more about immigrants and how do they file the return. I briefly mentioned ITIN before, individual tax ID number. So taxpayers that do not have a social can be issued an ITIN. It's from the IRS. It looks just like this, the green sheet that you see on the screen. So it is definitely not like a social security card. You cannot work with this, but you can file a tax return. They're 9 digits long, just like a social. All of them start with the number 9. And you can also use this to open up bank accounts and, get loans and things like that. It's really just used for financial services, right? Taxes, banking, things like that. And so when you file your taxes, we can apply for an ITIN, and that's the only way to get an ITIN is to attach it to a tax return. And it does require 2 forms of identification, one of which could be a birth certificate, and the other can be a foreign ID or a California ID to prove identity and foreign status. So that is a requirement, but once you have one and you are using it, you will have to renew with your tax preparer every 5 years. And it allows our undocumented neighbors to file a return and claim the refunds that they are owed. And then what credits can immigrants claim? If you kind of caught along in the last couple slides, there's a whole lot of credits they can claim. There's child tax credit, education credit, dependent care credit, retirement savings credit, Cal EITC credit, young child tax credit. It's essentially all of them with the exception of federal EITC. So uh, again, immigrants have a lot of rights when it comes to claiming these benefits as well. So highly encouraged. And again, this is a community that often may not file because of fear. So one of the things I wanted to share is, hey, let's talk about gig workers, folks who are self-employed, independent contractors. They also qualify for credits. The idea is that we want our gig workers to keep good records. So gig could also mean like Uber Eats, Uber, DoorDash, things like that. When it's under one of these larger companies, they are issued an income document, and they all fall under that bucket of self-employment. And so with self-employment, you want to keep good records of earnings and your expenses. So earnings, we always recommend that these individuals keep a bank account separate from their everyday spending, not to commingle their personal purchases with their everyday purchases, because they're going to treat their gig work, their self-employment, if they're independent contractor, as if it were a business. And there's a lot of benefits to that, because you're going to be able to take business deductions, and business deductions could be receipts from stores, receipts to buy things for your business. Also to keep a mileage log. Just like you and I at our jobs, if we want to get reimbursed for mileage, it works the same. They got to keep a little workbook like that. Nowadays, a lot of our clients download apps that they turn on when they're driving around for their business. Really important for things like Uber and DoorDash and things like that. Or let's say they are in construction, or they are an independent contractor and they're driving from client to client, they can turn on the app. It tracks the miles, and it's entirely accepted. It's a little more modern, but again, it's a major deduction and quite common with our gig and self-employed tax clients. And then for free tax prep LA, we help with gig workers. We help with self-employed and independent contractors. So I'll talk a little bit more about free tax services, but it is an area that we help with. And some tips for this tax season. We just started this week, but before you know it, the tax season will be over. Before you know it, your preparer or your tax professional may be fully booked. So you want to collect all your tax documents as soon as you can. Have a plan. What are you going to do? Are you going to prepare this yourself? Are you going to have a professional? And then again, file early. We've seen in previous years that the IRS is behind in millions of tax returns, and you don't want your refund to be behind all of those individuals. Schedule your appointment early, as soon as you can. Again, if you're waiting till the tax deadline, they may be fully booked. And this happens year to year. I mentioned earlier, IRS has had delays, expect delays, they're still behind. So use electronic file, use direct deposit. Do not, first of all, direct deposit is just so much more safe with all the crazy stuff that's happening with mail, theft. USPS is a little behind too. And let's talk about deadlines. That you may have read this on the internet or seen it in some social media. Because of the rains, LA County and surrounding counties have extra time to file. We're actually going to have an extra month until May 15th. It is a Monday, so again, you don't want to wait till Monday morning and scramble. Have a plan, start early. And this deadline is actually a deadline for people that owe. If you think you're going to have a refund, or your clients think they're going to have a refund, this deadline may not be, it's probably not for them, right? It's not for them. It's really for those that owe. Because on day one, right after May 15th, interest will start to accrue, and a penalty for not filing will also be accrued. So there's two charges to the tax account. If you'd like to avoid any penalty, you can file an extension. Your preparer can do that for your client. You can easily do it on the IRS website. There's a very simple IRS form. It just asks for name, address, and your social or ITIN, and you can mail it. So you want to avoid the penalty for not filing by submitting an extension if needed. But again, all of this is just for people that owe. It's very different if you're getting a refund. And I think that's going to be my next slide. So if you're expecting a refund, you really don't have a deadline. Like I mentioned earlier, you have 3 additional years to claim that money. So again, if you put off filing taxes, you can claim that money up until May 15th, 2026. Now, I don't recommend it. You want your money as soon as possible. But this also means that folks that didn't file, let's say back in for 2019, their deadline to claim that refund is coming up soon. It's going to be July 15th, 2023. That was that first year of the pandemic. The IRS pushed their deadline to July 15th. So we have July 15th, 2023 this year to claim that old refund 2019. I hope you're following me. It's a little complicated, but we remember that in those years there's some of these years had stimulus, some of these years had child tax credit. There could be a lot of money left on the table for you or your clients, and just because they didn't file in that season, they can still claim that money, especially that 2019 money, up until July 15th. And then a little tidbit: when you file late, the IRS pays you interest. You get a little bit more money because you're accruing interest because they're late to pay you. So a little bit of a treat there. 4%, it's not that much. All right, so I hope you've been able to have some of your questions answered. Again, we are going to share these PowerPoints over email after the webinar, but I also want to just put it out there that we need your help getting this information to your clients, right? We also have free tax preparation services. So on our website, freetaxprepla.org, you can see that we have a map with all of our locations. You can get phone numbers to schedule appointments. We also have free tax preparation software. The tax prep software may be really great for you if you don't want to go to a center or your clients and they feel good about preparing their own return. You can prepare a return with incomes up to $73,000. And then the tax centers are called volunteer income tax assistance sites. And then our low income tax clinics. So there are a few of these low income tax clinics, and they're a little bit different from VITA. These are attorneys that help clients, low income clients, go through audits, payment arrangements, answering a letter from the IRS. Maybe the IRS has made a decision on their account that they don't agree with. Perhaps they've been a victim of identity theft. The Low Income Tax Clinic Network is a really great resource for folks with serious issues with the IRS. And again, all of these resources are on our website, freetaxprepla.org. And one of the things before we wrap up this part about tax prep, we want all of you to remember, who are these folks that don't file? Who are those 1 out of 5? These are considered non-filers. It's one of the new words in taxes because we're trying to find them. We're trying to push them to think about filing, to actually file, submit a return, and claim their refund. Of course, it's undocumented workers. Individuals on public benefits. Often they think, again, the refund or reporting the income will make them ineligible. Maybe they made too little to file. These are folks that maybe work part-time, seasonal, maybe they're in school, maybe they're a parent and they're kind of picking up jobs here and there. They think, well, I didn't earn much, I'm not going to file taxes. Well, they're probably owed a huge refund. Folks that make cash or money under the table, perhaps they missed the deadline and they think they're kind of, I can't file anymore. That's absolutely not the case. And then also our unhoused neighbors. What we often see is our unhoused neighbors may lose documents, lose forms. Maybe they can't find old W-2s because of their housing situation is unstable. And again, we can help them get income reports from the IRS, and so that they can even file previous year's returns. So you can imagine if you haven't filed in a few years, claiming all of those refunds multiple years can be a tremendous amount of money. And so how do we target some of these non-filers? I wanted to show you what it looks like. Someone who makes $20,000 their income is so low, they're not required to file. They're under that threshold. If they earn this amount and they had one child, alone from the earned income tax credit, they would get over $3,300. With two children, the earned income tax credit and additional child tax credit is close to $8,000 total. $6,000 from EITC, $1,400 from child tax credit. Now with 3 children, it's an incredible amount of money, close to $9,000. So you can see that this is life-changing, and this would be just for one tax year. Other ways to get the word out, we are sharing resources. We have a lot of language, media, social media kits, newsletter messaging, flyers, things like that you can download. Visit us at tinyurl /FTPLA, and we'll also send this link in the email. You can access all of the toolkit that we give out to our community partners. Other ways you can consider to get involved. All the time, my team and I, we are out here doing tax education workshops. This workshop is in English. It's geared towards community-based organizations. It's a little bit different when we work with our clients who speak a second language. It's not so formal. We don't use a lot of the, text language and things like that. We're talking about, we make it a discussion and we answer questions, and we show them things about earned income tax credit and if you're a cash earner and things like that. And we offer these in multiple languages. This can be from one of our tax experts like Lydia, who's on the chat room. It could be from our tax attorney. We also host tax days at Center. So if you have a day or two that you'd like to promote this with your client, we are more than happy to come out and prepare taxes under the Voluntary Income Tax Assistance Program. We're always looking for volunteers. As a tax volunteer, you receive free training, you get a certification, you get licensed to become a VITA volunteer, and then you can prepare returns for the public. You can prepare returns for yourself, your family, and friends. You could have something to add to your resume. You can join an amazing group, hundreds of volunteers across LA County who are just out there, EITC warriors trying to claim as much refund as they can for our clients. And then some of you as an organization or a government agency, you may even want to start a tax center. This is a wonderful way to get people in the door, learn about your services, get them the money that they are owed. So I went through that quickly, and I see our group is growing. So I want to thank everyone for staying on. And before I pass it on to our bank on partner, I wanted to also just close it out with a short activity on how do you plan to share this information to your clients, with your clients, and how do you plan to share and inform your participants about the benefits of filing? And you can enter some responses in the chat, and look forward to hearing from all of you. And wow, some great responses. Thank you so much. At this time, we are going to have a wonderful presentation from the Federal Depository Insurance Corporation. We have Mary Duran, who will be speaking about low cost and affordable bank products and how to promote saving and banking with your clients. Because again, this is a whole lot of money, and we know that with these refunds coming in, we want to match that with a safe and secure way to keep that money and manage that money, and also get it quick and get it fast without waiting for that mail to come through. So Mary, I'll control the PowerPoint and take it away.
Thank you so much, Audrey and Donisha, for the opportunity to present today, because filing taxes is what we're calling a bankable moment. And it's part of the FDIC's #GetBanked campaign. Next slide. I hope that all of you know who the Federal Deposit Insurance Corporation is. We insure your deposits up to $250,000, but we also have a very strong mission to integrate economic inclusion and making sure that everyone has access to a bank services. All Americans should be able to secure an affordable bank product. And opening a bank account is really the fundamental step to establishing a banking relationship. Next. So the FDIC does a study every 2 years, and the last one was from 2021. And across the country, about 4.5 or almost 6 million people are unbanked. In the Los Angeles MSA, which includes the counties of LA and Orange, about 4.2% are unbanked. And whilst we're happy that the numbers have come down, it's still a large number since we know how big the city of LA is. And nearly half of the newly banked households who receive government payments say that this was a major reason that they decided to open a bank account either at a bank or a credit union. So that's why in the pandemic really showcased the importance of having a bank account to access the government payments rather quickly. And also, I know that many of you are working in BIPOC communities. So as you can see, the rate for Hispanics is almost 9% unbanked. And in terms of income levels, almost 10% of the ones that make less than 30,000 are unbanked. So this is a population that Audrey was talking about that is probably not filing their taxes either. And so just some of the things that people tell us during these studies is they think they don't have enough money to meet the minimum balance. So I'm going to share with you in a couple of slides bank accounts that address these issues that are really affordable. There is a distrust of banks, and so that's why we're out trying to promote the safety of banking, and it's much safer to keep your money in the bank than to keep it in the mattress. Next slide. So this whole hashtag Get Banked movement is really about increasing the awareness of secure and affordable bank accounts, highlighting accounts that offer an affordable option, and maximizing engagement with local community partners such as yourselves. So we're working with government agencies and intermediaries. And so the FDIC has developed a hashtag Get Banked webpage, which is full of resources. And I'll show you that in the next slide. We did a whole public campaign to promote getting a bank account last year in Los Angeles. And actually LA was the #1 in terms of responding to it. So, and we had that both in English and Spanish. And we developed a social media toolkit that has content for you to promote getting a bank account. And we have other resources like a newsletter, Money Smart, which is our financial education program, and a hashtag FDIC Explains. And on the right hand of the slide, you can see some of the banners that are available that you can utilize off of our website. Next slide. So this is just a bit of the resources, you know, the 10 reasons why a person should open a bank account, a little checklist on how to do it. There's a brand new video that is on our website that you can access, put on your website if you like, that talks about why people should have a bank account. Next slide. I wanted to show you that we have all these resources available in Spanish as well. Next slide. So today's point is to reach out to you to ask you to join the hashtag Get Banked movement. As I mentioned when I started, the FDIC research found that bankable moments such as receiving tax refunds or other government stipends may be the catalyst many unbanked households need to take the first step towards financial inclusion. And so the FDIC invites you to join the hashtag Get Banked movement. Next slide. So how do you do it? There's several links on this PowerPoint page that you will receive after the presentation in terms of talking about how to do it, how to access our social media programs, how you can also add links to your website of the information that's contained on our website. And with that, I'd like to move us to the next slide. So the reason I wanted to move us here is because Los Angeles County, under Danisha's leadership and the Consumer and Business Affairs Department, has established what we call a bank on. And this happens to be Bank on LA County. So it's not like a real bank. It's more of a process of identifying banks that offer a product. There's a national organization called Cities for Financial Empowerment Fund that actually reviews each one of these accounts to ensure that it meets the requirements of being an affordable product. There are currently 12 financial institutions, so it's banks and credit unions. Some of the accounts have $5 or less to as a monthly maintenance fee. Some of them have an opening deposit anywhere from $0 to $50. There are no overdraft fees because all of these are what we call checklist checking accounts. There's no ATM fees if they use the in-network, and $2.50 if they go out of network. And I think what's important for our clients is that check cashing is free of charge. You know, so many people are going to check cashers spending over $800 a year to get their checks cashed or to get their tax refunds. And they can use the online paying system. If this is on LA County's website, but you can actually print out this PDF, and you can't read it because it's so tiny, but the right-hand column shows all 12 of these institutions accept ITIN cards or an alternative forms of ID to open the accounts. And we had one very successful organization last year that when people came in to open the account, to do their taxes and did not have a bank account, they provided them this form, this flyer, so they could go and identify a bank, open their bank account, and come back to finish filing their taxes. So if you're doing any orientation ahead of time, you should encourage people to go open their bank account and then come back with all that and their tax information to file their taxes, because this ensures a much speedier process to getting their refunds versus having to wait for a check in the mail, or even worse, thinking that they'll go and get a rapid refund loan because they want the money now. So this is, I really applaud the county for establishing this. This is an FDIC initiative that began over a decade ago to identify products that were affordable, entry level for people to join the banking system. Next slide. I want to take a last opportunity to also share one of the programs for financial education that the FDIC has. We have a number, everything is free, but this one, How Money Smart Are You, is available in English and Spanish, and it's a game, and it can be accessed on their phone or on the computer. And it allows, so for example, if someone has more questions about opening a bank account, you could refer them to this so that they can self-educate. There's also a variety of topics, including budgeting. And so with that, there's information if you want to open an organizational account to keep track of your clients and the financial education that they're taking. It's all there. Next slide. And with that, I want to thank you for today's opportunity to present, and I'll turn it back over to Audrey.
Mary, thank you so much. Again, bank accounts and tax prep go hand in hand, and we want to make sure our clients keep all of their refund is intended for them and their families. And Bank On is another amazing resource to save our families money. So thank you so much. Today, we've covered quite a bit. We had a lot of questions in the chat. I want to thank everyone. But one of the takeaways is keep our email address, visit our website. It is a tool for you and your clients, and we look forward to helping you with any tax questions you may have. If there's any more questions or any questions that we should address, Lydia or Aragas, you can share now. We have a few minutes before the hour is over.
Yes, Audrey, we do have at least 5 questions that we got, and I think we can touch base on that. One of the question is there a minimum income to qualify for Cal EITC or the EITC?
The federal EITC and the Cal EITC, the Cal EITC has a minimum income of $1. I think one of the things we'll have to check with federal, I believe they have a minimum as well. Aragas or Javier, could you check that while we look up or we address other questions. I do recall that California recently reduced their minimum to $1, and we'll have is that the same for federal? Am I getting some nods? Federal is the same, also starting at $1 reported.
Great, thank you. Question number 2, how do former foster youth get the code to qualify for the credit?
Right. So the code would be the one that the Department of Social Service, California Department of Social Services, assigned to them. I'd have to look up exactly the name of this. So traditionally, a lot of the transitional age youth will be are provided like a case file number from the California Department of Social Services. This will be provided at tax time. They're using this number for any other benefits. Sometimes they are getting things like help with tuition or eligibility for other programs like housing and other assistance through the county. This would be that same number. And we can get an email address from that individual and provide exactly the title of that number.
Great, thank you. Question number 3, what if you're not an immigrant and are a middle-class single individual with no children? Are there any incentives?
Right. So without children and you're undocumented, you can get the Cal EITC if you fall within the income guidelines. There are other benefits like those, like education credit. There was education credit, there's education deduction, retirement savings credit. So there are a few benefits even if you don't have children and you are undocumented.
Or documented, correct?
Or documented, yeah.
Yes. Next question. Is the ITIN only for adults or can children apply for an ITIN as well?
Yeah, that's a great question. I might have rushed over that. So the ITIN is for taxpayers and their dependents. So if the dependents are here and they don't have status, they don't have a social, they could get an ITIN as well, and that would allow the taxpayer to claim that dependent.
Okay, our next question is, does Free Tax Prep LA help clients that haven't filed taxes for more than 5 years?
Oh, this is a great question. So Free Tax Prep LA, we do everything that we can. So as long as our software has that year, we will prepare it. So one of the things we like to ask is, why would they go 5 years back? Is somebody making them do that? Is it like the IRS? Is it immigration? What is the requirement? Because we saw earlier in the presentation that there's just 3 years to claim a refund. So if they're just doing this for the heck of it, for the fun of it, or they think they're going to get a refund, year 4 and 5, really, there's no reason unless they're being asked or mandated by IRS, immigration, or whatever party is requesting it. If we have the software, and I don't know if Aragas and Javier have checked the software, how far back we can go, but if it gives us access, we will do it. And some of the years they cut us off, they'll start taking away, 2017, 2018 as we move forward. So I think one of the things we'll have to see is how far the software will give us access.
2017.
Oh, that is 5-6 years back, right? That is 5 years. So yeah, if someone came in and wanted that 6 year, we just couldn't, because we just don't even have access to prepare it. But we're all for it. We ask a couple of questions on like why, or is it required? We don't want to prepare it for the client to think they're going to get that money, because it just won't happen. The IRS just won't send a refund for anything past 3 years, the deadline.
Okay, we're getting more questions coming in. We have another one. How much is the max child care credit this year for those parents paying daycare?
Oh, that is a good one. It got reduced. It was a much more generous credit. So I don't have the amount top of mind. You guys asked some tough questions. I think I see Javier looking it up on his 4012. So we'll get that to you, because we just had a huge shift in the maximum. So I need to get that update from one of my tax specialists.
Okay, we'll go ahead and put that in the chat as soon as we get it. And our last question is, when will you be sending the recording?
We can send it. It's going to take us a few moments to download it from the cloud, and we're going to upload it to YouTube. We're going to attach the presentation as a PDF. And we will also include the PDF for Bank On, the low barrier bank accounts with the 12 participating banks. So you'll get a email with all sorts of resources later today.
Great. I think that was all our questions, unless I'm missing anything else.
And I know there was a question about child dependent care credit. If that individual doesn't mind, we're going to have to look that up and send that out to you once we get the updated number for the current tax year.
Yes, I
Yeah.
actually have
Okay.
it. It's up to 3,000
Oh, I see
per
that.
qualifying person. Yeah.
Right. And up to 2 children. So if you're having
Yes.
this for 2 children, it could be up to 6K for those 2. Yeah.
Correct.
Yeah, it's a small drop. I think last year at 8,000. So, okay.
Thank
A
you,
lot of
Audrey.
guys.
That was all the questions that we
Wonderful.
had.
I appreciate it. We're after the hour. I want to thank everyone for joining. Look out for our updated, our message out to you. It will include the attachments, a link to YouTube with this video. We will also include a survey. We would love your feedback and continue the conversation. If you'd like to have something for your clients, for your other staff, please keep us in mind. Our contact information is on the screen. So thank you so much.